Hi and Assalamualaikum to everyone. Today for my video discussion, I would like to discuss about accounting for private entities, MPERS or Malaysian Private Entities Reporting Standard. Okay, for the introductions, a private entities is a private company incorporated under the Companies Act 1965 that A. is not itself required to prepare or lodge any financial statements under any law administered by the Securities Commission or Bank Negara Malaysia. And B, is not a subsidiary or associated of or jointly controlled by an entity which is required to prepare or lodge any financial statements under any law administered by the Securities Commission or Bank Negara Malaysia. An accounting standard based on IFRS for SMEs, which was issued by the IASB in 2009. Beginning on 1st of January 2016, all private entities, including SMEs, were required to apply the MPERS in the preparation of their financial statements. Alternatively, private entities that opt not to adopt MPERS could choose to apply MFRS. And MPERS is seen to be able to improve the consistent and comparability of the SME companies' financial statements. Firstly, MPERS is based on the IFRS for SME proposed by the IASB. The basis of standard adopted is widely used by 73 countries, including the United Kingdom, Australia, Hong Kong, and Singapore, and another 14 countries are considered to opt for the standard IFRS for SMEs. Hence, with a little bit of customizations to the Malaysian business environment, MPERS could ensure that the SMEs companies' financial reports and disclosure are consistent and comparable with those reports by international SME companies which have adopted the IFRS for SME. Specifically, MPERS is effective from 1st of January 2016 with a focus to the private entity with coverage of 35 sections. It considered akin to simplify MFRS and has a major difference with PERS, whereby many accounting policy choices in PERS are no longer available under MPERS. Okay, the development of MPERS is started on 2006, where in February, the second tier's reporting have been introduced. And in June, exposure draft or ED 5052 PERS have been issued. And in August, circulation of questionnaire to PE. And September, public hearing held. And 2009, in June, working group meeting held to discuss suitability of IFRS for SMEs. And for 2010, on March, ED 72 PRS for SMEs have been issued. And also in March, the roadshow on this ED 72 have been held across Malaysia and received mixed views according to its standards. And December, MASB have issued ED 74 RDR with questionnaire. RDR stands for Reduced Disclosure Regime, which is a part of the second tier's accounting framework. And they have requested MASB to replace PRS with this regime or standards. And in 2012, in February, they have request for views with 5 options. And in April, they have outreach for activities. And August, MASB with MIA field test on ED 72 and ED 74. And in 2013, in March, ROR or roadshows on route map have been held across Malaysia with 964 participants. And while this roadshow have been held, the majority of the participants did not support the third tiers. And on August, board have issued ED 77 MPRS. And on October, MASP issued ED on IASP's proposed amendment for IFRS for SMEs. And in August, during the board issued the ED 75 MPRS, there are no major objection have been received. And in 214, MASP have issued MPRS, while in June they are held 2 days of IASP workshop. And in 2015, MASP have issued updated MPRS. And finally, on 1st of January 2016, MPRS have become effective. Private entities. The meaning of the private entities is A. Private companies is as prescribed in section 15 subsection 1 of the Companies Act 1965. And B. Subsidiaries, associate and jointly controlled are as respectively defined and explained in MFRS 10 Consolidated Financial Statements or FRS 10 Consolidated Financial Statement, MFRS 128 Investment in Associate and Joint Venture, or FRS 128 Investments in Associate and Joint Venture, and also MFRS 11 Joint Arrangement or FRS 11 Joint Arrangements. Notwithstanding the above, a private company that is itself or a subsidiary or associate of or jointly controlled by an entity that is a management company as defined in section 2 of the Interest Scheme Act 2016 is not a private entity. Next, we will go to the comparison between MPERS and MFRS. There are few items that can be compared, which is firstly is preparation of financial statements. In MPERS, we can see in the section 3 where the components are A. 2 statements each for statement of financial statements, statement of profit or loss and other comprehensive income, statement of changes in equity, cash flow and notes. And B, no requirement for the third or statement of financial statement position, sorry. And for MFRS 101, the components are A, 2 statement each for this whole financial statements, and B, third statement of financial position as at the beginning of the comparative period when this is a retrospective application, retrospective restatements or reclassification of line item if material. And then we look at the comparison of recognition, derecognition, measurement and head accounting. For MPERS, we look at the section 11. Firstly, it needs to deal with basic financial instruments and is applicable to all private entities. Secondly, an accounting policy choice is provided for private entities to apply the requirement of section 11 and 12 in full, or the recognition and measurement requirement of MFRS 139. And for MFRS, section 139, there are 4 categories of financial assets. Firstly, financial assets at fair value through profit or loss. Secondly, held to maturity investments. Next is loans and receivables. And lastly, available for sale assets. And classification depends on the type of instrument, the intention, and by designation. Okay, then we will look at the related case study based on the MPERS. First case study is by Ahmad Saiful 2017, entitled of MPERS Benefits and Challenge to SMEs. In these studies, it is stated that those who choose to adopt PERS and MPERS need to adopt the standards beginning or after annual periods of 1st of January 2016, while for MFRS, for annual periods beginning on or after 1st of January 2012. Private entities in this context are described as the private company that incorporate under the Companies Act 1965. This entity or company is not under the law jurisdictions enforced by the Securities Commission and Central Bank of Malaysia, and not subsidiary or associate of or jointly controlled by an entity which is required to submit financial statements under the rules and regulation enforced by Securities Commission and Central Bank of Malaysia, MASB 2014. Findings of the study. The researcher find a lot of benefit of MPERS, which is firstly, uniformity. MPERS can easily compare a company with another company. B, reputation and confidence. It will boost the confidence in SMEs as the financial statements have been prepared based on the high quality of standard prepared by IASB. And C, cost reduction. Costs involved in preparing and maintaining the standards on a national basis. D, present fairly. Present the financial statement in a more representative manner and be widely accepted by the global business community. While E, jumpstart for compliance. It will prepare the company to adopt a bigger or fuller version of the IFRS. Next, internationalization can increase the revenue and profit ultimately by expanding overseas. Next, it can access to new capital, can attract new venture and shareholders from global players, and lastly, easy entrance to larger market. It will face fewer problems when filling in any accounting related documents. For the second studies by Saliza et al. 2019, it is entitled as the readiness and challenges of the MPERS. It stated that MPERS have been discussed in seminars organized by the professional accounting bodies, yet readiness of accounting executive in complying with MPERS in Malaysia is rather new, and empirical evidence on the matter is very limited. Sustaining momentum in learning organizations could be viewed from such perspective as not enough time or no help in terms of coaching and support, not relevant as in lacking business clarity, absence of walking the talk, the vulnerability, and lack of reflections, fear and anxiety, assessment and measurement, true believer and non-believers, governance, diffusions, as well as limited demonstrated strategies and purpose. And the findings of this study, In a total of 500 questionnaires were distributed to Malaysia Chartered Accountants in Malaysia. A further 74 respondents were successfully collected. Therefore, the final sample size was 91, with given a response rate of 18%. The result of this research indicates that level of readiness toward MPERS among the Malay Chartered Accountants in Malaysia is in favor of the implementation of MPERS. In fact, the accountants and auditors understood the need to adopt MPERS through future implementation and personally believe that it should be adopted. The clear picture of the MPERS as well as the objective behind the new changes was communicated well by the MASP to its members. Generally, there was a consistent understanding and acceptance level among the respondents, although the long-term benefits or outcome of complying with MPERS are still uncertain. In terms of challenges, the Malay Chartered Accountants ranked their views accordingly. The majority emphasized the requirements for relevant professional training as an essential matter in order to cope with the newly introduced standard. The need for an ethical environment as well as assurance that technical skills training to achieve a higher understanding level among accounting practitioners were among the top challenge perceived by Malay's accountants or auditors. The witness demonstrated by independent monitoring bodies in monitoring and implementing accounting and auditing standards and codes was also seen as a major challenge to the readiness of implementing MPERS. And for the conclusions, the objective of financial statements of a private entities is to provide information about the financial position, performance, and cash flow of the entities that is useful for economic decision-making by a broad range of users of the financial statements who are not in a position to demand reports tailored to meet their particular information needs. The private entities in Malaysia have three options to use or apply the accounting standard. They can choose to adopt PERS, MPERS, or MFRS. They have a choice to continuing with the existing PERS framework or apply the MFRS framework, which is mandatory for non-private entities except transitioning entities, or by 1st of January 2016, mandatory migration to the new MFRS framework. I think that's all for discussion in this topic, accounting for private entities. So thank you, and please stay at home, stay safe, and salam Ramadan to all my Muslim friends and lecturers. Thank you. Assalamualaikum warahmatullahi wabarakatuh.